So, guys, the time has come. We are going to be talking about the CPI data that is coming out in about 7 minutes' time. It's a very, very big bit of information. Usually, we have the CPI prior to the PPI. Now, I think that if you guys have watched my video earlier, you would have already got this. But I think PPI might be a bit of a leading indicator at the moment. So, let me know, AJ. What is it that you have seen at the moment? How are you feeling about this overall CPI print that we might see here, or that we will see?
Yeah, so for me, I do think we will get a negative reaction to it. If we don't get it straight away, I do think we are going to get that negative reaction initially, but we could potentially see a push towards the upside straight after the data comes out. That is something that is possible because we have seen that in the past. Coming into the data, we are actually seeing the price pull back. If you're looking at the charts, I'm sure you are aware, we have seen, if I just pull up my chart really quickly here for you, you can see that we have seen the price of Bitcoin pullback coming up to this CPI data release, and we have broken that value area low of this big range that we are in. I did tell you that I was expecting the price to come down to this value area low, and I did enter a short from up here. As you can see, well, it's not loaded yet, but I still have this short position open. There we go. I still have this short position open. Currently 35% in a profit. I did take 50% out of the trade because we were coming into support, but I told you I'm keeping 50% of the trade open because I want to see how the market reacts to this CPI data that is coming out. So yeah, make sure you smash a like if you want to see more trades like this. As you can see, 35% in a profit, and I did actually tell you that I was entering this short all the way back up here where we were finding major resistance. So if you want to see more trades like this, then please make sure you smash a like on this video, and I will continue to bring trades like this for you.
Yeah, exactly. And there's a few of you already on here, so make sure you do hit that like button. Really helps us out, and it honestly doesn't really cost you anything at all. So that is fantastic. I'm going to start off, and I'm just going to give you a bit of a preface to what we might be expecting. So at the moment, as you can see, equities are up before the US inflation data. And also the pound has jumped, but the pound has jumped for a different reason. That's basically because people have the Bank of England have said, look, we're just going to do a U-turn. You know that new person who came in as our prime minister? Let's just do the opposite of what she wanted to do. So maybe the economy will recover. So this is kind of what we're seeing. And so we do see CPI unlikely to deter the Fed from raising rates sharply. Now, I have this here. This is currently 82.5%. I loaded this up a couple of minutes ago. And I think once we get the CPI data, I'm actually going to come in and I'm going to refresh this and just see if there's any change at all.
I'll just quickly, Ben, I'd like to see what people's opinion is on whether we're going to dump or pump after the CPI. So make sure you leave a comment in the comment section and let us know whether you think we're going to see a dump or a pump after that CPI data.
Yeah, because we've got 3 minutes or 4 minutes until we actually get this. So, look, like I said in my video earlier today, I think because we have a PPI which was slightly behind, I think we're also going to have core inflation and, CPI inflation that are also behind. And like I've also said, if we, well, I say behind, I mean like above what we forecast. Right, so it's going to be, and it might be the same 8.1, but it depend on the month over month. So what I'm going to do is I'm going to show you exactly what we have here on Bloomberg so that we have a good understanding of this, okay? But yeah, so overall, look, the stock market is kind of recovering a little bit, as you saw just there from Bloomberg, not massively, but inflation jitters. US stocks have erased an October rally amid concerns of persistent inflation. So we are worried about this. It is a massive concern. And another thing I just want to mention, touching on the crypto, because I want AJ to bring us through the DXY, where are we at the moment, and also just quickly on the S&P 500, where are we at the moment. But Bitcoin is becoming less volatile than stocks. Now, this is a little bit of a concern because it's like, okay, well, I think it has outlined here quite well. Low volatility in Bitcoin might not necessarily be a good thing, especially if it's low on volume, which it is. And that's what ARK Investment Management analyst has mentioned. So they mentioned around here where 2018 Bitcoin was hovering around $6,000, and many expected what appeared to be overly pessimistic sentiment to result in a short squeeze, though the coin instantly dumped to $3,000. So at the moment, if people are thinking, hey, it's just a bit of a short squeeze, we're just getting pushed, the price is getting in and pushed up a little bit. We are expecting, or if history was to repeat itself, we would see a massive low to the downside. And that's the thing, when there's not that much volatility and there's not that much volume, there will be a big movement to the upside because people will finally get in. And if you've listened to us before, you know that typically this is going to lead to a break to the downside. But I am now, AJ.
That must be what Charlie's thinking, because Charlie's saying a small pump and then a dump. So maybe he's looking at us a little short squeeze and then that continuation towards the downside.
Yes, exactly. So what I'm going to do, I'm going to bring up Bloomberg here, and I'll also just drag this up on my phone so we have
the numbers will be out any second
audio. Now. Yes, exactly. So let me go to this. And then we can have Bloomberg surveillance. Let me know, guys, if you can hear this as it comes through. I'm going to play this. Also refresh.
Just keep refreshing that screen.
It's anytime soon.
I'm just refreshing the screen constantly.
So we're anticipating to be getting them anytime soon.
Yeah. Oh, what's happened here?
Basically, I think that we're going to, just kind of stay normal if we hit at that level, or we will begin to drop down massively if we get an overshoot in the CPI. Okay, breaking news as we have here. Michael McKee.
Hasn't come out on the website yet.
Okay, increase 4% month over month as opposed to 0.4% month over month. So this is a crash in the market, like we said earlier. This is exactly what we anticipated.
Oh, wow. Okay.
We're having a massive drop here. So consumer price increases, they're still on the increase, whereas we anticipated them to be on the, already slowing down. So it shows, again, we're still not, under control of inflation. NASDAQ down by 2%. This is absolutely insane.
Jesus,
can't believe this is happening.
The stock market, NASDAQ and the S&P 500,
NASDAQ 2.5.
A slight push towards the upside, but now we are seeing the price have a major reaction to this. Looking at the
also weekly jobless claims at 228,000 last week, estimated as 225. That's kind of a good thing, actually. That jobless, so more people lost their jobs than was anticipated. That's not so bad, but we're still looking at the CPI coming in overall. Look, so if you annualize this, the forecast was 4.6. Another thing I mentioned, guys, earlier in my video was, look, if we have core inflation at even at 6.5, we're still increasing. So even if we hit the forecast, it's still bad news because it's going up. It shows that the inflation that the Fed have not even got us to like a plateau. So we're still on the run up, and we're on a run up faster than what they forecasted. So this obviously shows that, look, 6.6 is extremely, extremely bad news. And we can see this coming in from generally just the markets here.
Yeah, the DXY is pushing towards the upside. That was actually at the very bottom of this wick here. That was around 112.6. Straight after this data came out, the price has absolutely pumped towards the upside. And it looks as though my theory is going to be correct, that we are potentially going to form that next higher high, which of course is incredibly bad for the crypto market. We can see we are getting that negative reaction from that DXY pushing towards the upside as well. That short position that I did have open is absolutely exploding now. I did take profit, as you said there, and I could have left that in, but it's always best to take profit on your trades to lock in those profits. But yeah, that's why I kept the other 50% in to see how we could react to the CPI data. And I said if we reacted bullish, I would close a short, but we've reacted bearish. And I said if we reacted bearish, then I was going to keep this short position open. And as you can see, that is playing off as of right now, which is good news for my short position, but yeah, for everyone's portfolio, it's not sort of the best scenario. But it gives us opportunities to buy Bitcoin at much cheaper prices, which for me is always good.
Yeah, you're absolutely right, and I'm just going to bring you guys back on onto something regarding the Fed. So as we mentioned, it's pretty much looking like the whole Fed scenario of 75 basis points is pretty well baked in. The Fed will have potentially slowed down. Maybe they moved to a 50 basis point or a 25 basis point away from that 75. If we saw that what they had done so far was already enough, but we know that they have all been saying pretty much every one of these like Fed presidents, because they have a different one in each state, pretty much. They've all been saying, look, we need to be more aggressive. So I'm just going to refresh this now. 82% of a 75 basis point hike. Let's have a quick look. Maybe it hasn't changed because I know the market is not open in the US. It has changed. Boom, that's an extra 5% that we're seeing here. So it really is a massive jump. And again, we're seeing, even more down here, which I think is updated a little bit further in advance than when we see this. So we're just on a further increase. We've known that CPI is running away from us. We know that core inflation is running away from us. And to be honest, I'm a little bit surprised actually about this CPI running away from us, because the only difference between core and CPI is that CPI includes energy and food. So, petrol, natural gas. Maybe it's because people are worried, or, there's talks about more sanctions to Russia, Russia closing off any supply. So that makes overall energy more expensive. Plus, also, you've got OPEC cutting their output by 2 million barrels. So that is going to affect the global oil and energy prices, i.e. pushing them up. And so this will affect CPI worldwide, which again is bad for the markets. And that is what's pushing your Bitcoin down. One interesting thing, though, Euro USD. Sorry, I was just going to quickly mention. So the euro against the dollar, that has actually started to push down, which is interesting and kind of strange. But I think this is kind of
lows again, won't it? New lows.
Yeah, exactly. Yeah. And another weird thing is like the dollar is the strongest of all of the international currencies. Look, I mean, you just if you can kind of see this graph here. Whoops. I want to see over what timeline this is, but we can just see a continuous upper movement for the dollar yen graph. And here we go. So yeah, so just like a very, very big and instant push that we're seeing here over the dollar yen, but also this is the same for pretty much everything else. And again, something that I mentioned earlier. So we will begin to see more of these stories of, especially at the moment, we're going through earnings season. People are expecting earnings in the stock market to disappoint. So if you're a company, you have to report your earnings every quarter. Currently, they're slightly disappointing. This is going to be bad for the market. We have CPI running away. That's bad for the market. And also we have some job reports that show that jobs are actually still relatively strong, which again is bad for the market. Plus, we also have an extremely high DXY, which again is bad for the market. And we're going to get to see this as the DXY keeps climbing up. People from the UK, Australia, or the Eurozone, anywhere, they're not going to want to buy US services as much. They'll just buy locally because the exchange rate is so bad. They have to spend a lot more of their own money in order to get the same product. And so the price goes up. So we're going to see less buying of US services, which means that even if not this quarter, into next quarter, we'll still see some real heavy price pressure on the likes of US companies, which is going to mean that their earnings will come down, especially over next quarter as well. So it's going to be really interesting to see how this plays out. But like you said, AJ, we're going to see a lot more good buying opportunities for us at these lower levels for Bitcoin.
Yeah, definitely. And with the Fed meeting in just under 3 weeks now, and
Yeah.
as you said, 87.3% of the analysts think we're going to get that 75 basis point rate hike. If we do get that, the market is going to dump there as well. And until we can get the rate hikes coming in lower, so lower than 75, such as a 50, that's when we can start seeing the market potentially push towards the upside. But right now, it's still looking very bearish. And over the course of October, I do think we are going to continue this price action towards the downside. So it's not really looking good for us at all. But, we have been calling this. We have been warning you about this. If you've been watching the channel for a while, we have been warning you. And you know that I have been shorting this as well. Just bringing up this chart here, I did short this and I did short another resistance level as well. Going back here, if we pull up the resistance level, let me bring it up quickly. Where is it gone? I'm not too sure where it's gone, but $22,700 we shorted there as well. It was at this level here, right here. We shorted this because there was a big cluster of resistance coming in. Well, there was also a big cluster of resistance coming in at $20,200, $300 approximately, which is where we entered this short position right here. And yeah, make sure you stay tuned for the future streams. If you want to continue to see trades like this, make sure you subscribe, turn that bell notification on. And I can see there's almost 60 people in this live. So if you could smash a like, we would really appreciate it as well.
I was about to agree with you there, but I choked on my own saliva. Yeah, no, absolutely. It's absolutely correct. I just want to drop one little thing before we go, guys. We're going to keep this very short. Don't want to drag this on too long. We've got the overall sentiment. We know what's happening. We'll keep it short, just for the people who want to watch it afterwards, so it's not too long. As you can see here, Fed swaps priced in peak policy rate, so the Fed fund rate, the rate at which it costs banks to borrow money from the Fed, i.e., bringing inflation down. This is their kind of number one tool. Number two is quantitative tightening, but we can get into that on another day. You do see also 0.34% increase for the DXY, the dollar index spot, but 4.85. Okay, this is now a change from what we anticipated previously. We anticipated I think it was a 4.4% by the end, right? The end of this year. So here we are looking at end of 2020. This is the summary of economic projections. This is basically the Fed coming out and saying, look, here's what we want to hit by the end of 2022, 23, 24, 25, blah, blah, blah. So they wanted a Fed fund rate of 4.4 by the end of this year. Okay. Next year, they wanted a Fed fund rate of 4.6. Okay. Just to show you here, so we always anticipated a 75 basis point for this November, which obviously bring us up from that 3.25 up to this 4, and that's a 75 basis point hike. And then we anticipated 50 basis point because that'll bring us up in the margin of that 4.4. Okay, but then we only thought, well, we only need to be at 4.6 by the end of next year. So why not just start off of the year in February, do a 25 basis point, and then you're still in that region because you're in between 4.5 and 4.75. So that encompasses the 4.6 that you wanted by the end of 2023. And then we're plain sailing and we will have a good time. But I think that's now going to change because, like I said, it is still on the screen. We're going to move to that 4.85. So we're going to see more pressure for longer when we come to these Fed fund rates, because we will see probably a new increase. And again, we can check back to this tomorrow, day after, whatever. But we're going to see much more pressure of us having another basis point hike. And I wouldn't be surprised if this became the most likely scenario, so that in March and whatever, we're at that 5% level, or in between 4.75 and 5. That I think is going to be the most likely scenario. But I just wanted to tip you off to that, so we can expect lower prices for longer. And obviously by that stage, we're probably going to be in a recession or a depression, but everyone will still be very worried. So I just wanted to kind of drop that in. AJ, is there anything else that you want to kind of finish off with before we cut the stream?
Yeah, quickly. Crippy just said ES is dumping hard. Yes, the S&P 500 is dumping hard.
ES minis.
This is the ES minis here, and that is dumping as well. But talking about
Yeah,
the S&P 500, this is the S&P 500
same.
futures, and if you've been watching for a while as well, you know that this is looking very, very similar to that 2008 crash. If we do break this next blue level here, which has acted as support here and has acted as resistance and support here, then the next level that we are looking at for the S&P 500 and the ES as well is approximately $3,226. That's where I would expect to see the price come down. Of course, if that happens, DXY will be pushing towards the upside, and crypto will also follow the S&P 500 towards the downside as well. So that's sort of everything we've got for you today. And, I really hope you've enjoyed this live, and make sure you smash that like button, like Crypto Invest said, smash that like button, you crypto freaks, because we are freaks, aren't we? Because we are looking at the most boring information in the world. But to be honest with you, it is quite exhilarating watching this.
We can make it kind of fun, like Devon said, is crypto the BDSM of financial markets? Absolutely, Devon, mate. I mean, I've had a lot less stress, and well, I don't know about a lot less fun, but a lot less stress when I've been tied up with some random girl smashing me. Maybe that was too far. I know you questioned
I think you
it.
took it too far there, Ben.
Exactly. But you are right. It's extremely stressful. It's extremely crazy to be in. But obviously the opportunity is here, and so I'm
Yeah.
glad that we can come to you and say, hey, look, this is what we think is going to do because of the amount of research that we do, and we have. To be honest, I think AJ, if I'm not wrong, right? How many I don't think we've got many or any CPI data prints wrong, have we?
I don't think we've got a single one wrong. No,
No, we haven't.
not
No,
as of
which is
yet.
good. Not as of yet. Hopefully, we continue this trend. But anyway, guys, look, if you do want to see more of this, subscribe to the channel. Make sure you do that because, like, as we said, we haven't got a single one wrong yet, And also make sure that you like the video. And as we said, we're going to keep this relatively short. So
Yeah.
thank you very much for joining. We're very grateful. And we hope to see you very soon.
Yeah, hope to see you soon and make more trades like this. Smash the like if you want to
Exactly.
see more trades like this, and we will see you in the next live. Thank you for watching,
Let's
guys.
go. Thank you.